Good afternoon, everybody. Happy New Year. Welcome to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech. And as always, joined by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. Happy New Year, and Happy New Year to the audience.
Right. And joining us back again for the second time, John White. How are you doing, John?
Just fine. I was just lamenting the winter weather that is coming upon us, but I'm not going to complain too loudly. So
well, yes, you are.
It is January.
You're a long way north in Edmonton, Canada. So it tends to get a little chilly up that part. And John, I should just mention as well, he is our news editor for LendIt Fintech News. So he is joining us today to discuss the news of the week, and not a super busy news week. So what I thought we would do is kick off. I wrote a fintech trends piece, 2022 trends that I think are going to be really impact the year in fintech. And so I thought we'd just kick it off just with that. And I'll just list the different trends here that I covered. Buy now, pay later faces a reckoning. I think whether that's I think that's something that is pretty obvious, really, because there's a lot of regulatory interest. Fintech's going public. We're going to talk about another fintech that went public just today, but that is going to continue to be a trend here in 2022. Changes in overdraft fees, my favorite topic here. A lot of movement in 2021. It's going to be interesting to see how that changes, how that happens in 2022. Feel like there's going to be even more movement there. Cash flow underwriting really has become, I positioned it as cash flow underwriting becomes the data enrichment layer. I've been hearing a lot about data enrichment, a lot of it based on all the transaction data that we have now. Talked about central bank digital currencies. We're going to have a lot of movement on China there. We are finally going to see, I expect, Project Hamilton, which is the research project from the Federal Reserve Bank of Boston and MIT, which we've been eagerly awaiting since September when it was supposed to be out, but should be out soon. Then the rise of Web3 in banking. Web3 is a pretty nascent technology when it comes to sort of mainstream finance, but I think we're going to see some inroads there. So anyway, guys, Todd, maybe start with you. What caught your attention out of my 7 trends?
Well, I'll pick up on 2. The 2 I'm going to say are Web3 and embedded. I'll start with embedded because I think that's a bit quicker.
I think I glossed over embedded, so I'm glad you mentioned that.
But yeah, I mean, embedded finance is just becoming ubiquitous. It's going to be natural for you to be in a non-financial app and have a financial offering of some sorts, whether it be a checking account or a credit card that's heavy with rewards to keep you shopping at X store. I mean, everything's going to be very, very seamless on your phone, and it's going to feel as if it's a natural evolution of your experience with that brand. We've seen this a lot already, but I think it'll just continue to occur, and it just become a natural extension of our daily lives, essentially. That we're whatever brand we're interacting with. But Web3 has obviously gotten a lot of play. There's a ton of innovation going on. The new internet has a fascinating evolution to it from where we were back when the first white paper of Bitcoin dropped and to where we've evolved to today, the crypto winter and the craziness of 2017 and 18. I think the most interesting aspect to it is how it intersects and interacts with traditional banking, because you have traditional banking and their tech here, and Web3 is like eons better, faster over here. Well, those two are really far apart. And how do we get them closer together? How do we get regulators? And it's really, how do you get banks to change regulators' opinion of some of this stuff? Because regulators move with banks because banks pay lobbyists and lobbyists do a lot of work in Washington. But the fact that more banks have begun some level of interaction with Web3, whether it be small or bigger projects. That to me is the key. How does traditional banking and Web3 continue to come towards one another? Because I think eventually, I think Paolo Passoni, when we were last in person in Miami, said it. Web2 and Web3 are going to interact together. It's kind of what application of Web3 fits your business best. And that's how I think banks have to think about it as well. Not just I'm going from where I am today to Web3. It's how do we begin to incorporate, because it's going to be unavoidable at some point.
Yeah,
It's getting so much traction. And granted, it still goes in these ebbs, like you saw. Bitcoin and all these other altcoins fell off a cliff the last few days, as regular markets did. So they're not necessarily a hedge all the time. But to me, that how traditional bank begins to figure out Web3 is really a fascinating journey, and I only think we're at the very, very early stage of that right now.
Oh, I'd say too. If you use the baseball game analogy that everyone likes to bring up, we are in the top of the first, and there's no batters, and it's like there's 0 outs.
We're still warming up. We're still warming up. We haven't even said play ball yet.
Right, because particularly when it comes to Web3 in banking, I think if you talk to Web3 folks, they would probably argue that we're a bit further along, but there just really has barely been anything happening. And
the only thing I'll end on is it does have to interact with banking at some point.
Yes.
We can, as decentralized a world as the crypto enthusiasts want, there's no way that's going to happen the way they want it. So it has to intersect. It has to.
Yep.
And so how that happens, I think, is hugely crucial, not only to Web3 companies interacting with regulators and that, but I think banks working with regulators and saying, hey, we've realized this is also important to us. Now we need to figure out how to make this possible.
Yep. Okay.
So the banks are going to be driving it through necessity, and it's the fintechs that agree to work with them in the early stages that will probably rise up.
Yep, for sure. So what else caught your eye, John, about the trends here?
I agree with Todd. I'm really optimistic about this year, the embedded finance especially. I think with the pandemic, people are now comfortable with everything being kind of all in one place, and the one-stop shop idea is very attractive to me. Mm-hmm. So reducing the barriers, the companies that are able to do that will, I think, set the stage for everyone else to follow. And I'm very much looking forward to that. And it'll give more credibility, I think, to others who are looking to do something similar. And I'm also really excited about Web3 and seeing who is willing to step up and start making it happen. And I agree that there's going to be some give and take needed, from the real zealots in the space who want to see completely decentralized. There has to be an understanding that for this to move forward, you need traditional banking on board.
Yep, although that's for sure. And I think I find Web3. That's my sort of. I made it the last one on my list because it's actually the one I think is the most interesting. I have to catch myself sometimes. I go down the Web3 rabbit hole because I just find it personally so interesting. And you can just go down the web. It's infinite. It feels like how far down the rabbit hole you can go in the Web3 world. But anyway, let's move on to our regular scheduled programming, shall we say, and the news of the week. As I said, it wasn't a super busy news week, but the first item I want to highlight is something that happened today, or we heard about it on Monday. But Dave, I'm talking about the Challenger Bank, Dave.com, or just the app Dave. They went public. They started trading as a public company. Let's get the sort of facts straight here. They merged with Victory Park SPAC, and that closed. I believe it was Tuesday. They started trading under their own ticker today. Opened, I think it was like $8.27 a share. Closed up about 3% to $8.53. Not a bad first day considering how some of the other fintechs have fared on their first day of trading. So. Still, obviously, a long way to go. They raised $210 million in a PIPE led by Tiger Global. I don't see anything about money being raised by the company. And I had Jason Wilk on the podcast just a few weeks ago, and it seemed like this is all just going to be like secondary type transactions, and no necessarily money coming into them from the actual SPAC transaction itself. Valuation more than 3.2 billion now. Dave is sort of in some ways a quiet achiever, I think, because they got 10 million members, second, I think, only to Chime. And you don't hear as much about them as you hear about with Chime. But one of the reasons I like them so much is because they really started the no overdraft fee kind of trend that we're now seeing. They started that in 2017 by basically providing overdraft protection, and so I'm a big fan of that product.
Overdrafts, I think, eventually change. Overdrafts aren't where they are today without Dave.
Right, totally agree.
Or someone like Dave, but it happened to be Dave, so they need to get the credit.
Mm-hmm.
Without them helping to push this idea of no exorbitant fees for overdrafting just a handful of dollars. Like the other, I think maybe it was before the holidays, I was telling you, Peter, I had an alert from Chase. I'm a Chase customer amongst other institutions. On my phone, it says the first $50 that you overdraft, no fee. That was unheard of.
Yeah.
From a bank
without
Chase's size. Yeah. And I think the other thing that they've recently saw, these banks, it doesn't hurt them. This only eventually will help them. Yes, they'll lose some of their bottom line. And I realize if you listen to Peter's fantastic podcast with Aaron Klein, that the fee income for a bank of Chase's size and stature is less bottom line focused than the middle of the country bank that basically is profitable only because of fees.
Right.
But overall, I think banks are starting to realize that changing this product for their customer keeps them with customers and eventually probably exceeds the lifetime value than the fees that they would rake in over a year, 2-year period.
Mm-hmm.
I really enjoy the fact that upstarts and innovators are forcing the hands of the traditionals and I know pain point is a phrase that I think was banned at the end of the year as one of the pet peeve phrases, pain point. But it's recognizing that that's one of the big things that consumers swear about.
Yeah, it's so punitive because the people that get charged overdraft fees are the ones that can least afford it.
And you get charged $35 for each transaction. It's not like there's a $10 cap. And it's like I went to the grocery store, I got milk, I got coffee, and I got a sandwich at different times throughout the day. That's $109 or whatever it comes out to at the old structure for 3 transactions that barely make up to 10.
Yeah.
It's a crazy way of gouging your customers.
Yeah. Anyway, let's move on. I want to talk about Pedal. Pedal had the first big fundraise of the year as far as announcements go. I'm sure they closed it in 2021. They announced, I think it was yesterday, $800 million valuation, $140 million Series D. Pedal, super interesting. I think they have really done a great job when it comes to that. They were pioneers in cash flow underwriting. That was sort of their big differentiator when they came out in 2017, and they were the ones that sort of really developed the first sophisticated models based on that, and so consequently they've really focused on these underbanked kind of customers, thin file type customers, and they're doing really well, and they've I'd say they've tripled their user base. Still not huge by challenger bank standards, but I'm a big fan of what they do, and I think they've clearly, they're not quite a unicorn yet, but they're on their way.
It's one of the few. I mean, I guess not one of the few because fintech is more than a few, but that offer thin or no credit file, a product that's not insanely priced in terms of credit. And that goes back to what you just said about cash flow underwriting and one of your 7 points for the year. If you understand what's in someone's bank account and how their money comes in and out of that bank account, you can then forecast out whether or not they can afford a loan or a credit card with certain, with a certain credit limit. So I think that's really helped to change, and that goes along with stuff like Netflix and other monthly expenditures that give a sense of, all right, this person can afford this, versus I think Petal's line is get credit, build credit, not build debt, or something like that. I forget exactly how they say it, but the idea of building a credit score by only going in debt is, and now companies like Petal are, we don't need necessarily the traditional credit score. We can view you through this prism.
Yep. You hear the cliche that millennials will never own real estate, partly because their inability to develop their credit scores. So I'm always applauding when I see moves to shift the goalposts a little closer.
Yeah, I mean that's the thing. I think companies like Petal just do such a service to that community of thin file consumers, because they are providing them with real credit. This is a real credit card, and these are people that can then they're in the system. Petal's reporting to bureaus, and they're starting to build up their score. So anyway, let's move on to China, because we're going to be talking a lot about China in the next a couple of months, because they've sort of, they keep doing more about the E-yuan, the digital currency that they've been piloting. They started this project in 2014, so they're probably a decade or so ahead of most of the world when it comes to digital currencies. But the thing that's interesting is they're starting to really ramp it up, and they've said a lot last year that they're going to really introduce this more widely when the Beijing Olympics happen, which is about a month away now. And so what we heard, the news, there was a CNBC article earlier this week talking about integrating with WeChat. Now, WeChat Pay, the article, like there's 800 million unique users or monthly users of WeChat Pay. So 800 million. And Alipay has, I think, probably just slightly less than that, but a huge user base. And rather than try and compete against those, the China digital currency is going to be part of. So it'll be inside WeChat Pay, it's inside Alipay, and that's how people will be using it. It's going to be dissected very, very closely how they actually go ahead and achieve this, but just super interesting and a smart move, I think, from the Chinese government. It's hard to fight user behavior, and it's better to sort of get them where they're actually already using it.
This is it's going to be a fascinating test.
So is this like the first real conglomerate super app?
Well, yeah, WeChat. I mean, Todd and I have been to the WeChat. It's Tencent's company. They're in Shenzhen, just over the border from Hong Kong. They're probably the most innovative company I've ever seen. We've been in their offices a couple of times. They are just so incredible. You can spend your entire time on your phone inside WeChat. You don't have to leave it.
Yep.
Everything you can think of you do today, whether it's doing delivery, checking the weather, doing fitness app, everything is inside WeChat Pay. Super app doesn't even do it justice. It's really an iOS type app.
Yep.
It's got everything. It's got its own ecosystem. So we don't have an equivalent here. We really don't. And imagine I used to say, if Apple, Facebook, and LinkedIn and Twitter all combined, we'd have something close to it. But even that doesn't really do it justice.
How transferable is this concept to North America, given the China's, the government situation there and oversight and transparency.
Yeah, I think this is something that I know that Ron Shevlin, and I disagree with him on this point. He says that there won't ever be a super app, a financial super app in this country because people have too many disparate things. I actually disagree. I think there will be eventually, but
I
no one's
disagree.
even.
I agree with Ron, Peter.
You do? I think there will be. Well, there will be a super app that I think will have. Nothing will ever have the capabilities and the widespread usage that WeChat or Alipay have, but I think we're going to have some apps that really. It's going to take multiple years, but I think we're going to have some that have massive. Like right now, you can't really do everything in one app, and I probably have I have a finance little folder on my app here with like 10 things in it, and
Me too.
I check most of them every day. I really think that's going to come together into one.
Regulators are already trying to break up Facebook and Google and for their size and control of data.
That's a good point, John. I not to delve it into a regulatory only conversation, but I don't think regulators will allow it to happen. Why do you think they've been so hard on Facebook with Libra or whatever the hell it's called these days? I mean, they are fearful that a tech company will gain so much power that they either crowd out competition and they also eventually price gouge their.
Yeah, that's why there can't be one. There can't be just one super app. There's got to be, I think, multiple. PayPal's trying to do it. Square's trying to do it.
I mean, they'll do it to a certain extent. I think. I just don't think it will be like if you put the two side by side, I don't think they'll ever be anywhere near equal. Yeah. We'll have like Super App Lite.
Yeah, I agree with that.
What would it take to appease regulators at this stage?
I think that's why you need competition. That's why it can't be one. It's got to be multiple. I mean, China has two. That's
one more than I expected.
Yeah.
I mean, China really has one. I mean, it's the government that, especially these days, the government walloped both companies and the sector so much that they essentially are just two arms of the government. But, here I think, data issues and data privacy issues also are fearful. Like what the issues like Facebook, Google, and them have gotten in trouble with, the regulators, especially the people that are in Congress, and I don't think broadly understand the nuances of a lot of this stuff. We'll kind of think of it through that prism of misuse of data and stuff.
Reselling.
On top of the monopolistic thing as well, which is competition. They'll also start in how do we know they're utilizing this data correctly? And so I think there's a lot of potential barriers in place.
Yeah. Anyway, let's move on. I want to talk about buy now, pay later, because interesting article in American Banker this week talking about how you've got different like the credit bureaus are really starting to take a close look at buy now, pay later. Where you've got Equifax saying they're going to add buy now, pay later payments into their sort of credit history. Really, and what was interesting to me is that Equifax research showed when they actually bring in those people who pay on time, who may have a thin credit file, they get a 21-point boost by incorporating their buy now, pay later activity. So this is another sort of thing, same sort of thing that Pedal does, where you're really bringing in those people who aren't using the traditional credit system at all. And that's why a lot of people will have Klarna. I mean, there was a fascinating thing I just saw this afternoon that showed the number of downloads that these apps had over the holidays. And Klarna's by far the biggest with like 4 or 5 million, I think it was. But so people are using these apps so much, and they're not part of our credit system right now. And I think that's this year. That's going to help. I think buy now, pay later are going to be supportive of this because it helps them with regulators to say, look, consumers love this product, and that's really objective reality. Now you can't argue that consumers love this product. It's just how it sort of fits in with the rest of the credit credit products out there. So I think this is good news for everybody.
And there needs to be uniformity too, because the way it's being, like there's some that report it now, but they'll report, they'll make sure they report you missing a payment, but they don't necessarily give you credit for the 10 that you've made. And so there needs to be a real uniformity, so people are getting dinged when responsible to be dinged, and they get credit for when they should be getting credit for, because it's very unequal right now. There's no so there needs to be kind of a and I mean, if the industry let it, that'd be great. I don't foresee that happening, so I think there'll probably eventually be a regulatory answer to it, to have them report a certain way, or at least the every other week or something like that.
I've been trying to get a mortgage I paid off 10 years ago off of my Equifax for the last year. So anything they do to update and enhance credit reporting based on reality, I'm all for that.
Right. Well, the thing is, as Todd just pointed out there, I think that we need uniformity, because one of the challenges, like Afterpay, sort of one of their, one of the things they promote is this will not impact your credit. We don't do a credit check, and anyone can get $200 of free, free credit from Afterpay. Now, whereas a firm does, I mean, we took out we financed our Peloton on a firm. We had to do, there was a full credit check done, hard pull done on our credit.
Yep.
And
Me too.
That's how they do it. So, and it's fine. Like, some companies don't do a hard pull, but I think we need to have uniformity as far as one company can't say we're reporting to the bureaus and another company says no, we're not going to report to the bureaus. I think that's just bad, and it's not going to help. Regulators are not going to like that. So I think we get some uniformity. There should be a buy now, pay later kind of group that kind of brings all this together. Although, as we know, that they don't really like each other very much, these companies.
No, but and you bring up an important point. The tricky part would be at the front end. It's like, Afterpay doesn't check the credit score, but you still want them to report that you're
exactly.
Making payments.
They don't have to check. You don't have
it's
to
not
check
the front end. It's
the back end.
Yeah.
Yeah.
So
anyway, I want to end with interesting story out of the UK this week. Anne Bowden, the head of Starling Bank, we've had her speak several times at our European events. She ruffled some feathers back in October, basically saying that open banking has been a failure in the UK. And she said, look, she was talking mainly about account switching, and there should be other things that we do. And then, so what happened this week, we found out that there was a consortium of 53 fintech founders who wrote basically a letter saying why she's wrong, and that it hasn't been a failure. And I think it's actually, I actually agree more with the fintech founders, to be honest, because you can't say something's a failure when it is still in process. I mean, it's been going, really only started going in 2018, so we've had like 3.5 years. These things take time. It takes time to get adoption, takes time to build products, and I don't think it's probably done as well as what everyone expected. Does that mean it's been an outright failure? I just don't think it's black and white. I think it's that's what Anne Bowden, I think, was trying to say. That.
But what are the outcome? Like the issue, like in some circles, this could be a giant success.
Yes.
It depends what's the ultimate goal you're looking to define as success.
I think they were talking about this particular case. It's failed to encourage bank account switching. That was the one thing, which is really just one of many, many use cases of open banking. So, like, for
you
her
don't even
to say,
need that as necessarily a big use case, as long as you can port, as long as your data is more portable, you don't necessarily need to change your bank account.
Right. Well, I mean, this was the context that it was.
No, yeah. And it's funny. Before we came on here, I saw that Anne Bowden said they're no longer advertising on Meta or Facebook until Facebook or Meta get their data, I think, privacy or fraudsters fraud stuff under control. So,
which led me to believe that was the motivation of this whole comment. because I couldn't understand what was she trying to accomplish. Because as you say, it's so early in the process that making a judgment based on that as the criteria didn't make any sense to me either. But maybe I was thinking maybe I'm just too much of a layman to understand.
I mean, I mean, maybe I think what she's trying to do is be controversial, and she's a tough lady. I mean,
she's as smart as they come. She's like there is, to me, I think there's a reason why she did this. I don't necessarily know it, and I don't know her motivation, but she is extraordinarily sharp and has built Starling into probably, maybe outside of Revolut, the best digital bank brand from Europe.
Right.
Yeah, it could just be to stir the pot and get people thinking more about, where it's going to go from here.
Anyway, we are out of time. We have a question coming in from the audience, but we do not have time to address it right now. We have gone over. So great to be back with you guys again. Thank you very much to the audience for watching or listening. And we'll be back same time next week. And just before I go, one quick plug: LendIt Fintech Nexus, happening in Miami, an all meetings, all in-person show. Make sure you check it out.
Be there.
Okay. See you next week.